Welcome to this custom-tailored deep dive.
I'd be here.
If you are listening right now, we know exactly who you are. You are the learner.
Exactly.
You are insanely curious. You want to cut through the absolute noise of the daily news cycle, and you want to get straight to those aha moments.
Without the massive information overload.
Right. And that is exactly our mission today. We've compiled a huge stack of sources covering everything from Friday, February 27, 2026.
It is a wild stack of material today, honestly.
We are looking at massive tech alliances, eye-opening economic data, high-stakes corporate bidding wars, and a complete whirlwind of political and geopolitical standoffs.
And looking at this pile of information, it really feels like we are watching the future being written in real time.
It really does. Our goal is to connect these seemingly disparate threads into one cohesive picture of where the world is heading right now. Okay, let's unpack this. We are starting with the AI economy.
Which is seeing some mind-bending numbers.
Truly mind-bending. OpenAI just announced a staggering $110 billion funding round. But the big headline hiding inside that number is Amazon. They are committing up to $50 billion of that total.
It's just a massive bet.
And there is a specific detail that just blew my mind. OpenAI is going to deploy 2 gigawatts of power using Amazon's custom Trainium AI chips.
Right, for a new platform called Frontier.
Yes, 2 gigawatts. That is the power consumption of a small city, isn't it?
It is. And what's fascinating here is the broader context. Think about the strategic maneuvering. Amazon is actively diversifying beyond its Anthropic partnership.
Right.
And at the exact same time, OpenAI is diversifying beyond Microsoft. By betting on Amazon's Trainium chips, they are both directly challenging NVIDIA's dominance in custom silicon.
So they don't want to be reliant on one single provider.
Precisely. Plus, it justifies Amazon's massive $200 billion capex spending to Wall Street. Investors get nervous seeing that kind of spending, but Amazon is showing them exactly who is buying into the infrastructure.
But, you know, there is a very real human cost to this AI boom.
Always is.
While billions are thrown around for chips, let's look at Block, Square's parent company.
Yeah, the Jack Dorsey news.
Right. CEO Jack Dorsey just announced a 40% workforce cut. That is over 4,000 jobs gone.
Wow.
And he was explicit. He pointed directly to intelligence tools and AI efficiencies. And Autodesk's CEO echoed this exact sentiment about hiring fewer people, specifically due to AI.
The contrast here between the financial reality and the human reality is striking. Wall Street actually cheered the Block news.
The stock jumped, what, over 20%?
Over 20% initially. They are targeting $2 million in gross profit per head using their in-house AI, Goose.
That is wild.
But skeptics remain. Piper Sandler kept the sell rating, noting Block's transaction losses actually increased to 18%. So in-house AI might have unforeseen operational costs.
And this AI explosion is bleeding right into national security. We have an escalating standoff between Anthropic and the Pentagon.
Two massive forces colliding.
President Trump just blacklisted Anthropic.
Yeah.
He ordered federal agencies to cease using their tech within 6 months. And Defense Secretary Pete Hegseth labeled them a supply chain risk to national security.
Just to impartially look at both sides here, Anthropic refused the Pentagon's demands because they want ironclad assurances. They don't want their AI used for fully autonomous weapons or mass domestic surveillance.
Or their red lines.
Right. But the administration argues Anthropic is trying to strong-arm the military and put troops at risk by withholding tech.
And the ripple effect is huge. OpenAI's Sam Altman stepped in with a memo stating they actually share Anthropic's red lines on lethal weapons and surveillance.
But he hopes to de-escalate the situation.
Exactly. Here's where it gets really interesting. Let's shift from tech to the broader economy, because the January Producer Price Index just came out.
The PPI.
Yes. Wholesale inflation came in hot. Core prices rose 0.8%, which completely crushed the 0.3% estimate.
When you break down those PPI details, services drove the increase. It's the highest since July 2025.
But goods fell, right?
Goods fell, but metals prices actually rose 4.8%. This severely complicates the Federal Reserve's path for interest rate cuts.
Which everyone is waiting for.
Exactly. And some economists attribute this pricing pressure to companies starting to pass on the costs of tariffs.
And the stock market reacted instantly. The S&P 500 lost its 50-day moving average. The VIX fear gauge jumped over 20. And UBS just downgraded the U.S. stock market to benchmark.
We really need to unpack that UBS downgrade. They cited 3 main reasons. First, a weakening dollar. They expect the euro to hit $1.22.
Okay.
Second, stretched valuations. The U.S. price-to-earnings ratio is currently 35% above international peers.
So we are just very expensive.
Very expensive. And third is policy volatility. Contrast this with Asia. Japan's Nikkei 225 just crossed 59,000 for the first time.
Fueled by the Takaichi trade. Right?
Yes, dovish central bank picks and growth-oriented policies.
Well, let's connect this directly to your wallet, the listener. President Trump proposed in his State of the Union that tariffs could substantially replace the modern-day system of income tax.
It is a massive proposal. But the economic reality check from the Tax Foundation and Peterson Institute is stark.
The math doesn't quite work.
Not really. In 2025, U.S. income tax brought in $2.66 trillion. Customs duties brought in just $195 billion.
That is a massive gap.
Even at a 40% tariff rate across the board, it would raise less than a fifth of income tax revenues.
Wow. Well, let's bring some good news for you regarding tax refunds. Early IRS data shows the average refund is up 10.2% to $3,804.
That is a nice bump.
It is, boosted by previous tax cuts and the release of the Earned Income Tax Credit and additional child tax credit. And 1 in 5 eligible filers miss the EITC, which can be worth up to $8,046.
That is too much money to leave on the table. And to tie this back to actionable advice, if you get a refund, micro-investing apps like Schwab Stock Slices, Acorns, or Stash can put that money to work.
Just a few bucks a day.
Literally $5 a day. Based on a 6% historical return, that can grow to $10,500 in 5 years.
From building personal wealth, let's pivot to the corporate battlefield. Netflix just walked away from buying Warner Bros., Discovery's studio and streaming assets.
And Paramount Skydance won with an all-cash bid of $31 per share.
If we connect this to the bigger picture...
Yeah.
Wait, actually, you usually say...
I do. If we connect this to the bigger picture, Netflix was incredibly disciplined. They didn't want to overpay for a nice-to-have asset. Plus, Paramount agreed to cover the $2.8 billion breakup fee to Netflix.
Which is huge. But the human element here is tense. Warner Bros. Discovery employees are terrified.
Because of the synergies.
Exactly. Netflix planned to leave linear networks alone. But Paramount is targeting $6 billion in synergies, which means job cuts. Culture clashes are looming. CBS News' Bari Weiss might take over CNN. And they are merging TNT Sports with CBS Sports.
It is a massive corporate crunch. Let's transition to another sector facing a severe crunch, real estate.
Oh, it's brutal right now.
The NAHB just released their new affordability pyramid. 52% of U.S. households, that is 70 million families, cannot afford a $300,000 home.
It is like a terrible game of musical chairs. 47.5 million households can only afford homes under $200,000. But there are only 20.7 million homes available in that tier. When the music stops, millions have nowhere to sit.
And the supply-side pressure explains why. The PPI for residential construction inputs is up 3.3% year over year.
Metal molding and trim prices are up a staggering 48.3%.
Exactly, though wood products like particle board provided some relief, down 24.4%. Interestingly, student housing construction is actually up 1.5% recently, despite demographic shifts showing slower college-age population growth.
Builders placing highly localized bets. Okay, let's move to the Washington Wire. And as a reminder, we are keeping this strictly neutral, just retorting the facts.
Lots of legal battles to cover.
First, a massive win for student loan borrowers. A federal judge dismissed the Trump administration's bid to end the SAFE plan.
The SAVE plan's impact is huge. 7 million enrolled, payments capped at 5% of discretionary income, and forgiveness in 10 years for original balances under $12,000.
But it's a temporary reprise, right?
Yes. Current legislation still phases the plan out by July 2028.
Next, the MAHA movement rift. President Trump signed an executive order to boost domestic production of glyphosate, the main chemical in Roundup.
The political fallout is intense. The Make America Healthy Again movement, led by RFK Jr.'s base, is furious about chemical exposures.
And Democrats see an opening.
Right. Democrats like Representative Chelly Pingree are trying to win back those health-conscious voters. But we should note RFK Jr.'s defense. He argues boosting domestic production reduces reliance on adversaries and prevents food prices from surging.
We also have the Jeffrey Epstein hearings. Former President Bill Clinton testified behind closed doors, stating, "I saw nothing and I did nothing wrong." And he expressed anger over Hillary being subpoenaed.
Concurrently, Representative Nancy Mace wants Commerce Secretary Howard Lutnick subpoenaed over a 2012 photo and visit to Epstein's island.
Pivoting to Capitol Hill, the DHS is still partially shut down over immigration enforcement disputes.
Democrats want bans on masked agents and mandate body cameras following the shooting of 2 U.S. citizens in Minneapolis. The White House just issued a counteroffer to try and end the impasse.
And House Democrats are using their policy retreat to gear up for an election fight.
Yeah.
President Trump is pushing the Save America Act for voter ID and proof of citizenship.
He is considering executive action there.
Yes, and Democrats are actively wargaming legal responses.
This raises an important question as we look globally. The most pressing issue is Iran.
President Trump stated regarding military action, "I'd love not to use it, but sometimes you have to."
The tension is escalating fast. Oman is trying to mediate.
But the U.S. Embassy in Jerusalem has authorized non-emergency staff to leave, and the USS Gerald Ford has arrived off Israel's coast.
It is a very precarious situation.
So what does this all mean? We've covered a whirlwind of AI disruptions, economic realities, and political showdowns. What stands out to you, the listener?
I want to leave you with a final provocative thought to mull over on your own. Let's connect the dots between the AI segment and the economic segment.
Go ahead.
If companies like Block are successfully using AI to replace 40% of their workforce to boost corporate margins, and our broader economy relies heavily on consumer spending, which makes up those $2.66 trillion in income taxes.
Right.
What happens when the very intelligence tools driving stock prices up start systematically removing the consumers needed to sustain that economy? Who is left to buy the goods or even afford the micro-investing spare change we talked about?
Wow. That is the question of the decade. Thank you for joining us for this deep dive today. Remember, staying well-informed doesn't have to mean feeling overwhelmed. Catch you next time, learner.